It's about aligning your priorities and what's important. There'll always be elements of price, and that's important. Take advantage while you can, but if you can use some of those savings to then incorporate better coverage into your program, now is the time to do it.
Welcome to Global Marketplace Insights by Willis, a WTW business, a podcast series sharing the latest trends from the specialty and regional insurance markets.
Well, hello and welcome back to the Marketplace Insight podcast series, where we're discussing the current state of the market for Q1 and some overarching views on Q2 and going forward. My name's Ollie Moore. I'm the Regional Placement Leader for Australia and New Zealand, and I'm delighted to be joined today by Steve McDermott, who's our Placement Leader for Australia. Welcome, Stephen.
Thanks, Ollie. Good to be here.
So let's just kick off with just from your position. How would you characterise the overall insurance market, kind of just coming towards the end of Q1? What are you seeing?
I think the market is moving. It's really returned to buyer's market conditions, and that's what we've seen through Q1 and the back end of Q4 of 25. We've seen capacity continue to improve across a number of the major lines, but property stood out by far. There's noticeably more competition, more insurer participation, generally larger line sizes, as insurers really look to maintain the premium volume they have in a competitive marketplace.
Okay, thank you for that. And just around coverage, are there any notable coverage expansions that you're seeing this quarter? And be good to just comment on a few lines of business there.
Yeah, sure. I think we have seen the return of some appetite from a number of carriers, where particularly around natural catastrophe exposures, like your flood and your cyclone limits, where we've seen some tightening of those conditions over the past 2 years. We've seen available capacity and limit it return to the market, so which is good news for buyers, particularly those that need that coverage for exposed risks.
Has that been driven? I know in 24 and 25, we saw an influx of new capacity coming into the market. Is that being driven by those new carriers coming aboard, or is it the existing kind of traditional carriers looking to expand through the lens of competition?
Competition is probably on one aspect of it. I think the reinsurance treaty results and the availability of capacity that we saw at 1/1 this year is really driving some of this coverage availability. Competition not only from the new entrants, but incumbent markets or existing markets who are looking to maintain their portfolios and, for that matter, grow in a softening market. It's not all about just the price reductions. It's also about the expansion of coverage.
Yeah, and I think from my side, obviously, my background historically has been financial lines. I think we're seeing very similar patterns in the financial lines market. I mean, I think right now, price is important, but it is still a market where actually looking to expand coverage. Now's the time as clients to kind of have that conversation with brokers and markets, right?
Yeah, totally agree with that. It's about aligning your priorities and what's important. There'll always be elements of price, and that's important. Take advantage while you can, but if you can use some of those savings to then incorporate better coverage into your program, now is the time to do it.
And would that be a similar lens when looking at retentions and deductibles as well? Is there's an appetite to look to reduce those? Yeah,
to an extent. Insurers will still rely on the data and the natural catastrophe exposure, for example, just to link that back to my previous commentary. But I think the more coverage elements will be available, depending on how the performance of the individual program has gone, if there is any ability to reduce retentions or deductibles.
Just moving on to pricing, how would you summarise pricing trends in Q1?
Look, I think there's a defined softening in the market now. We saw that at the back end of last year, where double-digit rate reductions were being achieved. That's only further accelerated in Q1 with the competition factors that we've discussed. We'll see that continuing, in my view, throughout 2026. whilst there's this availability of capacity and competition within the marketplace. And look, this is all available because of insurers' improved performance from their own financial perspective over the last 2 years, and a relatively lower loss results over that period of time.
Which is an interesting one, because you translate that to some of the financial lines markets, and we necessarily haven't seen a slowdown in the claims activity. But even so, pricing, I think, driven is a theme here, right? Driven by increased capacity in the market, has proved that clients can still get, in the majority of cases, significant discounts. What strategies, in that pricing context, have helped clients achieve the best outcome?
Well, I think the core fundamentals still apply here, Ollie. It's early engagement, so it gives you time to create that competitive tension with your market carrier. So you've got time to go to the market, look at optionality, clean, credible data that you've reviewed, not only from your exposures but previous claims, making sure your risk recommendations and the like are up to date, and just really demonstrating to the market your resilience of your operations and the improvement narrative. Yeah,
really good points. And finally, looking kind of ahead, Q2, in the remainder of the year, if you had a crystal ball, what's your view on market dynamics kind of going forward?
Obviously a very interesting world environment at the moment. But what we're anticipating from the general insurance conditions is this competition to continue. There is appetite returning for sectors that insurers hadn't participated in as they look to keep their portfolio sizes. So we're anticipating continued decline in rate and availability of capacity across a number of sectors.
Great. Well, thank you, Stephen, for your contribution on this episode of the Marketplace Insights podcast, and look forward to having another chat.
Thank you for joining this WTW podcast, featuring our latest global market commentary. WTW offers insurance-related services through its appropriately licensed and authorised companies in each country in which WTW operates. For further authorisation and regulatory details about our WTW legal entities operating in your country, please refer to our WTW website. It is a regulatory requirement for us to consider our local licensing requirements. The information given in this podcast is believed to be accurate at the time of publication. This information may have subsequently changed or have been superseded and should not be relied upon to be accurate or suitable after this date. This podcast offers a general overview of its subject matter. It does not necessarily address every aspect of its subject or every product available in the market, and we disclaim all liability to the fullest extent permitted by law. It is not intended to be and should not be used to replace specific advice relating to individual situations, and we do not offer, and this should not be seen as legal, accounting or tax advice. If you do intend to take any action or make any decision on the basis of the content of this podcast, you should first seek specific advice from an appropriate professional. Some of the information in this podcast may be compiled from third-party sources we consider to be reliable. However, we do not guarantee and are not responsible for the accuracy of such. The views expressed are not necessarily those of WTW.
Copyright WTW 2026. All rights reserved.